Ladies and gentlemen, welcome back to the channel. We just braved the elements of Winter Storm Elliott to bring you guys this video. Is like a 3-hour drive, almost crashed about 25 times to give you guys hopefully better audio as well as this beautiful face in this video. Nonetheless, guys, jokes aside, let's get into what we need to talk about because there's a lot to talk about. So first things first, this article says AMC stock submerged in dark pools. Why this could be a problem? No shit, right? But it says AMC stock is heavily traded in the dark pools, a practice that deeply bothers many retail investors. Here's why their concerns are justified. And there was a back and forth discussion between Gary Gensler and David Lawyer, which will be highlighted to you guys here in this video. So that's one part of this video. We're going to look at the Ortex data. That's another part. But we're going to look at why next week could be a little bit more bullish than not, because we don't have earnings. We don't have economic data. So usually when that is the case, you can tend to get more of that upside move, guys. So let's get into this video. Hit that like button and subscribe to the channel. Thank you for doing that, and most importantly, Merry Christmas, guys. Let's get straight into it. So I just read the title and the subtitle to this article, but let's get straight into the meat and bones of it. So it says AMC Entertainment owners have been battling a raging wave, one that's unseen but felt by millions of retail investors all around the world. Dark exchanges, also known as dark pools, are private exchanges where institutions can trade millions of shares at a potentially better price without the need to intensify their trading intentions, or identify their trading intentions. My apologies. Dark pools became the topic of 2021 when Reddit's Wall Street Bets forum traders began to speculate about the suppression of meme stock prices despite heavy retail buying pressure. In an exclusive interview with Bloomberg, SEC Chairman Gary Gensler confirmed that 90 to 95% of retail orders are not passed in the lit exchange, but rather in dark exchanges. Now, more sub-retail communities such as MMAT, MMTLP, and COSM have been banding together on social media to raise awareness of these retail concerns in the markets. AMC heavy dark pool and off-exchange volume. AMC's dark pool and off-exchange volume accounted for 62% of Wednesday's trading day per the IEX exchange. Only 9% of trading volume occurred in the New York Stock Exchange. Over the past 30 days, the average off-exchange and dark pool volume of AMC stock traded has been over 55%, according to the same source. Shareholders are worried that off-exchange trading is limiting the impact that their buying power has on the performance of the underlying security. While these serious concerns were once found to be nothing more than a speculative conspiracy theory from disgruntled retail investors, it turns out they might be onto something. In a historic interview led by Dave Lawyer, We the Investors establishes a direct communication channel with SEC Chairman Gary Gensler. This is the first time the retail community has ever been represented via an organization fighting for market transparency. Chairman Gary Gensler says that with so much trading happening off exchange, he doesn't think that the playing field is leveled, as dark pools give institutions an unfair advantage. When asked whether retail investors could have a much larger impact on the price action of a security outside of dark pools and off exchanges, the SEC chairman responded, quote, "Retail investors as individuals don't have the power to move the markets, but retail orders combined could have significant price impacts. AMC Entertainment's holdings isn't the only company drowning in dark pools. Cosmos, Health, COSM, GameStop, Meta Materials, all of these are, 35 to 70% dark pool traded." Now it says retail investors paved the way. Retail investors are paving the way and acting as exchange agents. But this is just the beginning. Raising awareness of potential market injustices in AMC stock, GameStop, Meta Materials, and other securities has certainly gotten the ball rolling. But the SEC wants retail investors to take action by weighing in. The SEC chairman says the best way to combat predatory short selling is by submitting comments and letters on new proposals directly through the SEC's official SEC website. The self-regulated organization, FINRA, is also under intense scrutiny by the retail community. FINRA is responsible for outsourcing best execution with the best execution rule, according to SEC Chairman Gary Gensler. This means the self-regulatory organization has the power to execute orders in off-exchange and dark markets for best execution and price discovery. But Gary Gensler says that rule is too important to not be in the SEC's court. The chairman told We the Investors that he does not agree that sending 60 to 80% of certain stock to the dark markets is either the best way for FINRA to act on price discovery, or that he would consider it to be the best execution. So it says right there from the top SEC authority himself, Gary Gensler, that this probably shouldn't be happening. So I know there's a lot of proposed rule changes. I know there's a lot that is going on right now with the SEC. We'll see if this does have a role to play, but for certain it will eventually, and I think 2023 might be the year that something actually does get done. You don't need these dark pools. You don't need this for specific securities. There might be a cap to this, or what percentage of individual securities can go through dark pools. There will be something, and I know there is quite a few things in the pipeline to be voted on, and even some things that are out for public comment right now that could actually help AMC quite a bit with the dark pool volumes, guys. So there's all of that information. Hopefully you got something out of it. Let's get into the Ortex data on AMC here briefly as well, and we can see live short interest of free float sitting at 19.37%. The amount of shares currently sold short sits at 99.84 million. Cost of borrow average at 228%. Cost of borrow max at 305%. Cost of borrow minimum at about 20%. The live numbers that we got from Interactive Brokers on Friday was about 65% short, and there was only about 10,000 shares that were available to be traded, and most of the day you had about 0 shares available. 1,400, 2,000, right? 3,000, 5,000, 500. Not a lot of shares. So this is driving up cost of borrow rates, which is driving up the cost of borrow rates for everyone that is that is involved with the stock. And I did try not to cough in the mic. Hopefully that didn't sound as bad as they have before, and starting to feel a lot better now, just so you guys know. Hopefully this should be gone pretty shortly. I'm hoping tomorrow things are looking a lot better. But nonetheless, if you guys are curious on why AMC stock dropped so much on Friday, dropped about 10.5% in regular trading, a lot of it has to do with the option activity. So on a normal day with AMC stock as of now, you can expect to see $500,000 to $3 million placed in the interesting and unusual options category for AMC. Typically, $500,000, $3 million, not too atypical, right? But when you get $30.5 million of options heading into AMC on a single day, and out of that $30.5 million, only 1% of it was to the positive side, 99% of it was negative positioning. That is going to play a big role in what happens that day with AMC, and that's exactly why the stock did drop 11%. And also, you're heading into a new year, so there's a lot of the end of the year positioning that you are seeing a lot of tax loss harvesting potentially starting to happen at these levels. We'll see. In theory, tax loss harvesting might be a positive thing for AMC, so we'll see really in this next upcoming week. In theory, should be positive. Again, we've been surprised. Some things just have not been positive that should have been positive this year for AMC. Nonetheless, for next week, you don't have any earnings. Like, this is the earnings picture for next week. One company Tuesday, one company Wednesday, one company Friday. These companies are not going to move the markets. You're not going to see a CNBC headline based off of these companies' earnings. It's not going to happen. So you don't have that earnings risk. You don't have economic data. Like, if we take a look at Monday, December 26th, you have nothing. Tuesday, you have nothing besides these bond auctions. You do have the S&P Case-Shiller Home Price Index year over year and month over month. This will be interesting, and it can move the markets. It comes out at 10 a.m. Tuesday. I don't expect it to, though. And, if it does, it's not going to be like a multi-day event. I don't think it would be a 2-3% down move for the markets, or an up move for that sense. I don't think it'll be too eventful. Wednesday, you literally don't have anything besides these bond auctions on Thursday. You don't have anything as well besides initial jobless claims at 9:30 on Thursday, and then initial jobless claims 4-week average as well at 9:30. Could be big. It just depends if it's a big beat or big miss. That's what's really going to make the markets move. If it's in line with expectations, you're not going to see a big move whatsoever. Now, on Friday, you don't have anything as well, but some more bond auctions really throughout the whole week. So that might be the big story where bond yields do go, as well as the dollar. I think something that might be a little bit bigger is we might start to get more of the holiday numbers that are coming out, especially if they're good. That could really give the markets a skew to the upside. Who knows if that's going to happen? We're still hopefully going to get the way of water numbers. That could also be important specifically for AMC. But the lack of earnings, the lack of economic data, the end of the year cycle, you could be setting up for an upside move in the markets to ultimately get batted down once we start 2023. Once we start 2023, I think things will get a lot more volatile, will get a lot more choppy, and ultimately make that move down to the downside as more people start to put out their earnings expectations for 2023. More analyst comments start to come out, and really a lot of downgrades might start to come out as well, because throughout 2022 the markets have not been falling because earnings expectations have been getting worse. The markets have been falling because inflation has remained high. The markets have been falling because the Fed has remained super aggressive, but not because earnings are expected to come down. Now, some people are expecting 5, 10, 15% year-over-year earnings declines in many of the most important stocks to our stock market. Once that gets realized by the markets that that's what we're facing, that's when you get more downside. So I don't think it's quite yet. I do think it's a couple weeks down the line, probably, until you get that downside, that big downside. We're talking new lows, right, for obviously 2022, 2023. But in this next upcoming week, it could be quite docile. It could give you a move to the upside. And that's my overall arching analysis on the next week. Now, as far as AMC on a technical basis, I mean, the indicators, we could pull up the RSI, we could pull up the MACD, very bearish. We are above 2022's low as of right now. That was set on December 22nd. That was on Thursday at $4.11. You're currently trading at $4.33. So you're off of that low, which is definitely a good thing. If you can get that move to the upside in the next week, you might actually form this triple bottom formation that we have talked about a couple times here on this channel, and that could fuel more of that upside move, guys. So that is going to be it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you for watching. Merry Christmas, and I will see you in the next one.